Hi everyone, it's the weekly Inner Circle update. I'm doing it today. Jeremy's away, so you've got the joys of me to do the entire thing. A couple of little things just before we start on the markets in general. Obviously we had the end of the quarter semi-annual last week, and then we've had so everything tends to reset in terms of a range relativity perspective, and then we've had payroll on Friday, so now and also the 4th of July, so we have a big holiday as well. So really I would say next week is when everything starts getting back to normal. Just one thing about payroll, I'm struggling to remember the last time, whatever the payroll number was, that the stock market actually went down on the day. Sometimes it spikes lower but it ends up. It's just something to remember. At some point that will obviously change, but it seems like probably 8 or 9 times out of 10 payroll day is bullish for the markets. It doesn't necessarily last though. I'm going to start off with indexes. This is the Nasdaq future. As mentioned on the channel during the week, we held the weekly support point on Wednesday. I'll just draw a circle around it. There we go. And we had a pops and time continuation buy. It held that low by a couple of ticks, so pretty much perfectly. Gave it all back on Thursday, and then we had payroll on Friday. So that is a very, very important level. So 55, 58.75. Won't worry about that bit too much. So until that is taken out on a closing basis, then the short-term bias is up because we've had the buy signal, and we can rotate back up. Remember that we've had a major shift in a weekly level, so this is a big barrier at 59.07, but we can rotate back up. These other lines are daily lines, so not as important. During the week I'll be updating the short-term lines so that you get the inner view within this range. On to the E-mini. Pretty quiet really. We never attacked the key support, that weekly level at 23.95. Pretty quiet really. Rotated up or down. We topped out against the daily level on the Tuesday, but not really much to report. The Dow had an opportunity to fall during the week because it opened up some space, and it opened up some space on the short-term charts, but it really sort of rejected that, and we've just got this choppy behavior. So we've had various divergences. This blue square is the extreme, but it didn't, which was coming into this monthly level. So really 21.169, pretty important. Unless that is taking out, then we're just going sideways, but with a slight bullish bias. Remember the range relativity levels, so I'm just going to put that on, will have all reset. So whereas here we had pinks and blues, so quarterlies and monthlies, creating a barrier, as we begin the new period, then that all resets. Yeah? So what was resistance last week or the week before has disappeared effectively, so there is some further room now for it to rally if it wants to. Just remove that. Go do the Russell. And it's pretty boring. The weekly has moved to the top, same as what the Nasdaq did, so that is a barrier. We did have a go at it the week before last. Again, there is some space below. If it takes out this pink line here, then it opens up the weekly support, which is a long way away. Moving on to Europe, the DAX, that also held a really important level, this weekly level at 12,301. I think we stopped 2 ticks on the week before, and then on Thursday it was 5 ticks. So very, very important. 12,301, closed below there on a daily basis, and there is nothing for about 1,400 points, so space to fall. Euro stocks, not particularly particularly interesting. What we've had there is that blue square, which is a slam dunk signal, but then it's been followed up by those blue crosses, which are bullwhip signals. So if I was to put the time average band on there, you can see how everything's condensed due to this sideways period, so the bands suddenly come together, which means it doesn't take very much for it to go beyond the fourth deviation and then reverse. So those bullwhips are not as important as what you'd see on something else. Here's a counter one, it's a bear cage, and you can see the same thing where it really condensed and then broke out pretty powerfully there. That's a massive signal actually. So when we get them after a breakout when the band's been very narrow, we're not so interested in it. FTSE's been a little bit frustrating in that it broke a weekly level, and here we go. It broke that weekly level at 73.13, and then it just hasn't really developed. It's just doing nothing. So a bit of frustration with that position. It's getting to the point where we'll probably just liquidate it, scratch it, because it's just not happening. If we do make new closing lows, then it still opens up space, but effectively the FTSE is pretty quiet. I'm going to have a quick look at some sectors. Just do the previous loved ones first. So semiconductors, got a bit of a bid on. We had a time continuation buy on Wednesday, and they're just recovering a little bit. There's not much in the way of resistance. I do SMH, it's a similar one. It's a similar picture. Wednesday created a variety of buy signals that came along with the Nasdaq as well, and that extended into FANG. So if I do Google, so we also had a buy there. It's formed a minor daily support based on the low on Tuesday, and there is a bit of space for it to rally. I think we also got one on Amazon, if my memory serves me correctly. Yep, there we go. But note that the weekly has moved to the top. Just go back to Google there, make sure I didn't miss that. I think Google did as well, didn't it? Yes, it was the week before. So while we've had buy signals, they really indicate rotation, so the market can drift back up again, but it's really going to have to get through those big weekly levels at the top before you can get truly bullish on it. Just do Apple, might as well do all of FANG while we're here. Apple made its high all the way back in the end of May. It's just teetering over the edge. I think the low on Thursday was 20 cents above that 42.20 point. Note here this blue line, this is the predictive nature of peak energy and peak expansion. It's telling me that at the end of July, if we haven't taken out that high back in May, the monthly is going to move to the top, so it's going to join the weekly. That could well be a timing point if that happens. Excuse me. Alternatively, a daily close below 142.20 also has it in trouble. The other thing to remember there is in previous weeks I've talked about if it broke down 42.20, which is a daily level, then we had this 38.62 support, so it was pretty close. Well, actually, it's now risen, so it's made this whole 42.20 level absolutely critical, because if you close below it, it's really not a lot there. We've got 130.49, and even the monthly line, which would still be support for the whole of July, but remember that if we went into August, that line would shift upwards, and so would leave even more space. So close watch on Apple. Netflix did break down and then had a big day on Friday. So it just about looked like it was breaking down, and then has, at the moment, it's showing a false break. So a little bit frustrating there. Home builders, number 3 sector. So really, really loved. We topped out to the tick at this monthly level, which was the first thing that alerted me. We were sort of, on the scheme of things, it was a big up day on Friday, but actually within the bigger picture it was really just a sideways week. One of the positions that some people have is LEN, L-E-N, which is one of these home builders. topped out to the tick, which is again what got interested. Had a pretty positive day on Friday though, but it has to close above that monthly level if you're being particularly risk averse, to say that you're going to get out of that short, and it would be a small loss. Alternatively, for ones who have either got smaller positions or happy to take a wider risk, then the weekly level was moved to the top at 55.75, so keeping a close eye on that. While we're on stocks, there were a couple of positions that were liquidated during the week, which you would have got on the channel, so those positions are no longer valid. And we have this one here, VSTM. We had a power play buy on Wednesday, which is what alerted me to this stock, and you can see that it had taken out the final daily level. I'm just going to put the time area studies on there as well. And what happened here was at the end of June, semi-annual moves up, quarterly moves up, monthly had already moved up, and the yearly is below price. So we have this stepping procedure. So within this sideways, it just gradually became more bullish, and then when we had the plough play signal on Wednesday, that was the green light to say it was going to go long. Obviously no idea that it was then going to explode best part of 50 or 60% the following day. At first couldn't find a story. A little bit more digging yesterday on Friday, and there's three things that it could be when you get a power play or a day like this. Insider trading, somebody knows something they shouldn't and are being a bit silly and buying it, although I don't think anyone ever gets prosecuted these days. Chat rooms, so it could just be getting some chat room hype. That's the worst sort of thing, because what often happens is you might get a 2 or 3 day rally and then it starts giving it all back again. Or could be institutional buying. You know? So in the absence of any story, then that's probably the three things that normally can happen. It turns out it was institutional buying, so they'd done a presentation to potential investors in the recent past, and so there's a huge amount of volume and they've got involved. They're in a phase 2, which potentially is the most explosive phase of biotech, also has the greatest risk. So when buying a stock like this, you've got to assume that the stock could go to zero. It probably wouldn't. It'd probably go to $1 if something happens badly. But so it's in that phase 2. Remember that any story that's going to come out, the market's going to be closed. So if it's bad news, there's not going to be anything you can do about it. However, if it's good news, price will just explode. So took 25% off, so that barring something catastrophic, it's now a free trade. For those that have missed it, if you still want to get involved, obviously the boat has sailed to a certain extent. I will be updating short-term levels through the week, see if there's some opportunities if people still want to get involved. Initial target is $8, so a long way away. If I put the range relativity on there, the stock has not been in existence long enough to give us quarterly, semi-annual, annual. So range relativity is not going to be any use to us on this particular stock. So we have loved sectors and unloved sectors, and auto parts is very much unloved. Sector number 196 out of 197. O'Reilly is a big component of that. Broke down a while ago in June, so as it became even more unloved. And then it came out with some results during the week. Sales were actually up. I think it was about 2% quarter on quarter or year on year quarter. But it wasn't as good as what the market was looking for, and the price got absolutely trashed. So this was a stock 2 years ago that just kept on going up and up and up. Yeah. So back in 2015 was very much a loved sector. So we've really actually gone all the way back to where we were in January 15. What happened was other stocks in the same sector fell in sympathy. So you have AAP, also produced a slam dunk, sell down, again broke monthly support a while ago. It's unloved, it's in a capitulation mode. Everyone's saying, why am I holding this piece of junk? but it will go through the bottoming out process. We're nowhere near that yet, but at sector 196, it's on our radar screen. Need to see some support move to the bottom of the market, and we need some sort of stabilization. So auto parts definitely on our radar screen. Just looking at some of the other stocks that people have been holding, we had a power play buy. This is on AFL, and this is something that quite often happens. You break out of the top, it's above monthly, there's no resistance, it's a news driven breakout, and then the price simply goes sideways. It has no further interest from anybody. Support has risen 77.21, so risk averse. If it closes below there, you say, you know what, this trade is not doing anything, let's get out of it. OSUR, Aura Assured Technologies. Again, very similar chart to AFL. This one is trying to go higher. We did have a negative signal on Thursday, but it hasn't taken out supports yet, so needs to make new closing highs for this to extend, but still a valid position just. Just a reminder with those buys on Google and Amazon, for some people, fund managers of this world and some of the professional clients, they need to own that stock. They don't have any choice. So that buy signal on Wednesday was something that they would have actioned upon. If people are likewise, then that's basically what you wait for. Some people on the channel know that the sort of retail space, discount stores, groceries have been hit when Amazon took over Whole Foods. So we got this knee-jerk down, and price has been going sideways. It is an unloved sector. There was some buy signals that some of the clients and customers took. We had a negative signal on Wednesday, so not quite developing, but the weekly has moved to the lows, so support has strengthened, as it were, but it's got to get over this 72.55 point first. In the semiconductor space, Skyworks, SWKS, it's been something where, again, some people have been short. They've been short the semiconductor ETFs as well. Had the divergence as a continuation, so a time continuation sell here, broken support. We're in a little bit of a vacuum here, but there has been no positive signal as such. It's just rotating up with the ETF. You've got to remember, this was the number one sector, or number two sector, for a very long time, and it's now slipped down, I think, to number 18, so really gone out of favour. There will be people who think that this pullback is an opportunity to get long, so it's not surprising we get a bit of a reaction back up. The trend, however, is most definitely down in the bigger picture as it becomes more unloved. Right, we're going to move on to currencies. That's enough on stocks and indexes. Start with the Eurodollar. Was around payroll, can get a lot of volatility, so there's a few things that happened in the short term, and I did a Eurodollar trade because we went up to 114.36, which was the short term resistance, topped out at 40, and did a little day trade. It then came back down to the short term support, and I could probably bring that chart in. Let's just do that. Bear with me a sec. Just here we go. Look a little bit messy. So this is the 60-minute, and this is how we use the peak expansion and peak energy to get the short-term picture. So this is how we understand where support and resistance is actually happening, and we use up to half-day time frames, so 120, 240, 360, 480, half day 720. There's the payroll. Goes right up to the final major resistance, which was at 114.36. Stopped dead. I gave it about 10 minutes and then said, okay, let's get short. Very, very easy stop. You know, got short at about 114.28, I think it was. Stop was at 43. I don't want it making that high, a new high after payroll. And we drifted back down to the nearest support, so I took some money off there, and then the rest of it I said I'm just going to get out on the close. If you're doing a trade around these short-term levels, that's really what it is, a short-term trade. While we're on that, while I've got this page up, I'll just show you gold. So initially the payroll number was strong, which should be strong for the dollar, should be, who knows, for stock markets, they can take it whatever way, should be bearish for bonds. So what happens? The dollar went down, so counterintuitive algorithms. That's why we don't really get too involved in very short-term trading unless we get to big levels, because in the modern world algorithms will just they have so much power, they'll make the market go in the opposite way. That's logical, and that's exactly what they did on payroll. So really strong number, and what happens is the dollar went down. So dollar down, gold up, just on a pricing point of view, and it went directly to the final, or the nearest major weekly resistance, which was on the 720-minute chart, and we stopped a couple of ticks, just three ticks, 1228.1. The level was at 24. We then reversed. That is a UFO and time continuation sell on an intraday chart, and we broke the final support. Jeremy on his channel on gold, on his daily update, I think it was 1215.3, big weekly level. It's closed below there, so gold is in trouble. Returning to the daily chart, what's really important there is to note that there are no levels. There's nothing close at all. So we had the power play breakout, we have 116.17 as a monthly target, so nothing's moved at all. Slightly different on the pound. There was a time continuation on Monday, although it was going into support. You can see that red line there. But on Friday we've had another divergence pattern. This is one that wouldn't appear on Chart IQ. It's quite a complicated indicator, which is based on multiple time frame divergences using the RSI. That's why it's called RSI 1, 2. So we got 1 and 4 came up. There can be 5 patterns in total. So the pound is on the defensive. We will be looking to get involved. If I look at it on the cross rates, pound Australia, so we've got a monthly line at 172.10, and we've had a UFO and a time continuation, and I think it did it against the Kiwi as well. Kiwi I'm not so interested in, and I'll show you why. Just do the pound Kiwi first. Yep, so that's an extreme, isn't it? Right, okay, so steps, 240-minute steps ended as well. Which is what diamonds are, and we've had a time continuation sell. The reason I'm not that interested in is because the Kiwi itself against the US dollar, I'll just show you that. We know it had reached an extreme. We had a double sell signal. It went right back up there and tested it. We held support at 72.40 on Thursday. I think it was a couple of ticks above 44. Still got to take this level out. While the New Zealand dollar against the US dollar is under that cloud of a sell, both the pound and the Kiwi could go down, and so the cross wouldn't necessarily do a lot. So pound Aussie or pound dollar are much more interesting. Quick look at the yen, which for me has been pretty nondescript and boring for quite a while. It's sort of just grinding higher. It moves effectively risk on, risk off. So yeah, until the S&P does something, then I'm not necessarily that interested in the yen. It's just rotating, but there's no immediate resistance. If I do the futures, it's a little bit different, and we have taken out a daily level, and we have a weekly level right back down at 85.32. But as you can see, we're getting signals on down days, so these are time continuation positive signals, but they're really not being confirmed by the price action on the day itself. It tells me that the trend, while it is down, is losing some momentum. We move on to commodities, and start off with crude oil. And we had the buy signal that then formed a support, and we just up. I think it was 8 days in a row. We got above that monthly line into the holiday. I think, as I said last week on one of the videos, markets reverse or accelerate around holidays, so it was a pretty important time. So you had to wait till after the 4th of July to see whether it was going to carry on, and it emphatically reversed that signal on Wednesday. This is a time continuation sell, but these diamonds show a multitude of step processes ending, all the way up to the 420-minute chart. Then the focus became 44.31 to 20, which was a short-term level. We did go below it, and the close was 44.33, so just 2 ticks above. In order to be bullish, it's got to get back above this monthly line, which does open up space. It's sort of teetering over the edge. Certainly the fundamental news this week was pretty much negative across the board. You had Volvo saying that they're going to stop putting petrol in cars in a few years' time, hybrids or electric. You've got to assume that all the major manufacturers are going to go that way at some point, which is a massive negative on oil. It's actually a massive negative on governments as well. The amount of tax that governments get from oil, especially in Europe, is astronomical. And in the longer term, you've got to think, well, how are they going to get that revenue from somewhere else? I don't think they can put the price of electricity through the roof like they've done in Australia, because it affects everybody, whether they've got a car or not. So something in the background economically to think about. It's a few years down the road, but governments love taking money, and they love spending it, and so they're going to have to find it somewhere. But potentially a drag on economies, but miles down the line. So that was crude. I'll just do Brent. It's a bit of a waffle there, but trying to avoid economics really. Do Brent. Not surprisingly, a similar signal, although it had taken out the monthly level, which was much closer, and it did close below the monthly. Just do unleaded, because they are a little bit connected. Driving season in America. Just about hung in there. Not actually anywhere near as bearish as crude, as you can see, way above the monthly, held above a daily, and only a stepping process ending. So unleaded is nowhere near as negative. We've already done gold. I think I did the intraday chart, didn't I? So I'll just give you the daily chart. Took out that weekly level at 17.8. If I do, so we've got a minor level at 12.03. I wouldn't worry about that too much. We closed below the weekly bearish point on Jeremy's video. And from the peak expansion and energy perspective, there is really nothing until 11.33, so a long way down. Absolutely no reason to be long, that is for sure. If we do silver, silver has also broken down. It held that monthly level on Wednesday pretty much perfectly. Really missed a trick there. I was too busy looking at the euro and the Nasdaq. Should have been looking at gold and silver really, because that was a brilliant opportunity. 16.13 was the weekly high of day. Oh boy, 16.14. So just one tick above. You would have had to been quick, that's for sure. But now it's broken the monthly level, and so there is no support. I'll just put some big relativity levels on. The fact that we've entered a new quarter, semi-annual, etc., has just effectively opens everything up. So from a timing point of view, it means the price can fall quite rapidly. I think the other thing to remember there is these markets are pretty terrible when, by and large, if I was just to quickly show you the dollar index, which has sort of stabilized, but stabilized at pretty weak. So the dollar has been going down, which is obviously a positive for gold and silver just on a currencies perspective, and they just can't go up. So if the dollar ever actually gets its act together, that would just be a fresh negative. We did have a weekly extreme that flagged on was that Monday? Yep. So we are overdone on the dollar index, but we need to see some of these, more of these red or pink lines go to the bottom. We also need a weekly line to come underneath before we start thinking about whether it's turned the corner. Resistance is light and not very close, but we need some of these lines to go underneath, and they're not doing it yet. Next one is sugar. We talked about sugar being what's called a slingshot move, so it's very, very overdone, looking to get long. And what we need, I'm going to show you the daily chart in a moment to show the bigger picture. This is the shorter term picture. Major resistance, so the half-day resistance from 1655 dropped during the week to 1407, and we just closed above it. So very interested in getting long sugar. The morning session on Monday can be very illiquid, so I'm always a bit wary of getting involved in the early session, but definitely something that we're looking to get long. If I was to do London sugar, can move completely differently. It's refined sugar as opposed to raw sugar. This took out its half-day resistance point earlier on in the week, and has got some room to move. So sugar, very, very interesting. Just going to move that chart out of the way. There we go. And here's the daily chart. So you can see these blue squares, which are all extreme signals, so range relativity extremes. We had a power play buy, green square, pops, and we've sort of held above the daily resistance. There's nothing really there till 1579, so definitely looking to get long. I suppose the danger is it might get away from us a little bit, so definitely watching it pretty closely on Monday. Just while we're on softs, just do a couple of others. Cocoa, first market I ever traded. Monthly has moved to the bottom. And weekly is there as well, so it is on our radar screen. It hasn't been doing a great deal, but that's a major shift in the monthly. Unfortunately on cocoa I know far too much about the fundamentals, which tends to get in the way. Fundamentally for me it's hard to get massively enthusiastic about it. The same story is actually true on sugar, although the fundamentals have shifted slightly, but sugar is much more overdone than cocoa. While we're on it, coffee, again, as coffee was second market I ever traded, don't very often get involved in it. Again, this has reached an extreme, had a power play buy, had range relativity signals. The weekly has moved to the bottom of the chart, so you can see that that's getting more bullish as well. For people who want to get involved in coffee, it's close to breaking out and could move. It's got 20 big figures on the upside. Let's go on to grains. Pretty explosive in wheat. We had a crop report at the end of last week which was deemed to be bullish by the market. You could argue that you could argue either way really. Corn first of all, still involved on the corn ETF with a December option, so plenty of time to get through the season. It just can't take out this 405 on a closing basis. It's had 3 attempts during the week and just can't do it. That's really the key. Close above 405, it opens up the upside considerably. All about weather. I'll show you a website in a few moments where I look and you can see what's been going on. We do soybeans. Soybeans closed above 949 on that. There we go. 949.5, closed above 949.5 on the day of the report, and then just gapped higher on Monday and has just extended higher. Difficult to find a spot to get involved. I bit the bullet without putting anything out on the channel because defining risk was actually pretty difficult. It's weather related. Grains, it's the time of year to be trading it, so as a professional I was okay about getting involved. It wasn't something that I felt comfortable putting out on the channel. For the professional customers and some of the ones who are involved in hedging, it was a different story. They had to get involved. So soybeans still bullish. 1068 is the focus, but there is no sort of support forming, which highlights the risks of this trade. Do soy meal. Similar picture, but it had that monthly resistance, took it out on Monday and is extending higher, 35.10. and then we'll finally do wheat. So 3 types of wheat. I can show you Kansas first of all, because this was really the key. And the problem that wheat had been having was its inability to close above 493 effectively. You can see that it kept on popping above, had a couple of dojis, reacted back down, and then on the report we took it out and we soared, and it's given some of that back. We have had a time continuation sell which says take some partial profits, which I put out on the channel for those who are involved in the wheat ETF. I don't think the picture's particularly changed, because when you look at Minneapolis wheat, that's what you call the trend. Serious breakout, no resistance, extreme volatility. The range on that day was the best part of 100 points, so that's pretty monstrous. Slam dunk sell, then a time continuation, and then a steps ending. But really the important point is 745.5, so that's a reference point for me. Close below there and it starts giving things up. Having said that, the weather for Minneapolis wheat has been catastrophic for the crop, and doesn't see that changing anytime soon. But we're in for a wild ride, that's for sure. Sorry. We look at Chicago wheat, power play breakout, extends higher, massive gap, bear cage, time continuation, a gap. So quite a lot going on there. 526. I don't like to see gaps filled. I don't mind if they're filled by a couple of ticks and then it reverses. Ideally we don't get this filled. There's also the danger that we gap lower tomorrow and then we have what's called an island reversal, which would be pretty nasty if it was to stay there. So there's quite a few different things that can be happening on wheat. Have to keep a close eye on it. The weather isn't good, that's for sure. Right, close to wrapping up now. Final thing is bond markets. Been some pretty big things happening on bonds. We had Draghi opening his mouth and making European bonds fall out of bed. So there's quite a few things going on there. T-bonds has really had 2 major signals. The first thing was these multiple bullwhips at monthly support, and then a time continuation of pop, so a major. That's pretty much as good as it gets really in terms of a signal, a support point. And then we've had various rotations within the dailies which are not so interesting, and then we got to the weekly level, the black line, and we were overextended, as Jeremy had mentioned in previous videos. Then we had a slam dunk and a steps ending, and we've just gone down, 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 down. We sort of stabilised somewhat. The initial move on payroll, which was a strong number, was bonds went up, so algo pops, as I call it. But then the close wasn't very good, and these levels are minor. If you go into other parts of the curve, so if I do the 10-year notes, the lack of support is also evident. As you can see there is no support on the 10-year notes. It broke down some dailies. There's nothing for a long way. If I do the 5-year notes, so this is where we start getting closer into what interest rates are actually going to do, we close below weekly support. So again, negative, having had a sell signal a week or so before. If I go into Europe, we'll start with the Bund. Actually, I'll just do euro dollars in the States. Better just check that. Always, because interest rates have been so low for so long, it's impossible to get the monthly levels to rise. Minor supports, but we're below the weekly level, so 98.22 is the important thing there. If we go into Europe, just do the Bund, which is a 10-year German interest rate. Got a weekly level at 160.08. We had a bullwhip signal, not a lot of range. I'm just going to put that time average band in, and here you can see how different the signal is, because the bands are completely different to what I showed you before on a previous market. So we have been trending down. We managed to go beyond the false deviation on Thursday and then reversed. So bonds or European interest rates at a pretty critical juncture. if I do the Buchsel, which is the long-term German debt, it's slightly different in that we have closed below the final monthly level. But what I really need to see is the Bund break that weekly as well. So it's slightly different here. But the Buchsel, the ultra long end of the market, still looks in trouble. It's got to close back above 160.66 for us to think it's going to recover. If I do the 5-year German interest rate, that has also broken its monthly level. So there's a little bit of conflict there. It's not easy to know exactly which one's going to win. Is the Buchsel and the Bobble going to drag the Bund down to that major support? If I do other parts of Europe, France had a major breakout a couple of months ago. Here we go. Slam dunk on Draghi. Took out this big important support. You can see how it held there until Thursday. It's broken down. So a bounce into this area is something I'm very interested in selling. Always like the idea of selling French debt. Big area there, no real support. And the Italian debt market is a general barometer for, I think actually, for European equities. This was major buy signal, power play, bang, 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 bang. Then we got Draghi, slam dunk. There was no support, and it's closed below the weekly level. Now, so that's in trouble as well. It'd be interesting to see whether the DAX and the Euro stocks start taking notice of bond markets as opposed to taking notice of the American stock market. But yeah, weekly has already also moved to the top of the trend. So big things in bond markets. Finally, going to end up with the gilt, which is the UK market. Bear cage signals. I put that time average band on there again. You'll see how these were slightly different. It had condensed and then broke back the other way, so it wasn't the same as the Bund. We failed at the weekly support, and it's in breakdown mode. There is no support. So the professional client base that follow me still very much short bond markets. They have been short since that signal that we got on treasuries on that day there. Have been taking some partial profits, but at the moment there's no reason not to stay short. I suppose the real question is whether equity markets will ever start taking any notice of that. At the moment they are not. Right, so that's 45 minutes nearly, so I think that's about it. Things for the following week. Now that payroll's out of the way, it's not really too interested in any of economic news. I don't really know what's coming out. I don't care what it is. But sugar is a focus. Bonds are still down. Nasdaq support. They feel like the key takeaways. And whether the euro can form some resistance. At the moment it hasn't. So they're the main things to look at. And also for those that are active in grains, then we're going to have to keep a close eye on that. Okay, that's a wrap. So see you all next week.